Hi everyone, welcome to another honeystocks.com stock market analysis, which is going to be going out on the 18th of September 2021. Now, before I do the usual and of course walk you through a lot of the charts and flip over to my screen share, there's a few questions that I want to kind of address this week with regards to the overall market. So I'm going to be spending about 5 minutes or so walking you through some incredibly important charts in my world. I know those of you that follow my channel and have done over the last few years know that I have an ability to simplify things and make it understandable for everybody. So hopefully you get a lot of value from it. I think the big question on everybody's lips at the moment is, are we going to correct? I want to kind of walk through why I'm not quite in that camp at the moment. Could I, of course, change my thesis next week? Absolutely. I think, it'd be silly not to ignore some of the key levels in the market, but I do want to put this out and just help as many people as I can. And if you do get some value from this analysis, please do like it, share it. What charts do you like from the analysis? What charts would you like me to cover perhaps next month? Let me know in the comments. It lets me know that you like the work and kind of motivates me to do more of them. So let's flip over to my screen share. Let's walk through some charts and let's see what the market's telling us. Okay, before I get into the analysis, as always, please do pause the video, make sure you're comfortable with that before proceeding any further. Basically just says that there's not any investment advice and for you to do your own due diligence and not be silly. Maybe to give myself a little bit of credibility, I'm registered with the CMT Association, working my way towards my chartered status, and technical analysis is something that I'm widely known for in the professional world. And if you do get value from this, please do subscribe to the channel. Be good to have you along for the journey. Now, I think the analysis this week, I want to spend perhaps 5 minutes just walking you through the broader market. I think the theme, certainly from the messages, the emails, the social media comments, etc., something along the lines of, are we correcting? Are we about to fall off a cliff now? There's not a one-size-fits-all approach and answer to that, unfortunately. It's a case of weighing up the data and drawing logical conclusions and understanding the type of environment that we're in and whether or not we want to be very much risk on or perhaps a little more risk off. Now, the Dow seems like a logical place to start. Now, I'm going to walk you through some charts that I've been providing to clients over the last couple of weeks. Of course, the many facets of the game that I have to understand. And I think when you understand, certainly with something like the Dow, where we're potentially looking at a failed breakout, we are starting to see some deterioration. So I think the question that I have at the moment is the Dow the index that could get a correction party started? Now, I think what it says to me at the moment is we need to be a little bit cautious. Now, when we go in and we start to drill it down and we look at the S&P 500, which I'm assuming most of you benchmark against, and I'm assuming it's the chart that most of you know the best. This is my chart for the SPX. Now, these Fibonacci levels, now whether you believe in technical analysis or not, it doesn't really matter. What does matter is that the market respects these levels. We can see that, the chart can demonstrate that. And something that I understand is when we get failed breakouts, we can get moves going in the opposite direction. So I think for me, as long as the S&P 500 is above the 4400 level, then I am still looking at bullish setups. I'm still providing my clients with premium charts that are showing really good uptrends, and I'm going to be sharing many of them with you this weekend. But just to put it into context, the market is asking questions at the moment. The 50-day simple moving average is the chart. If you have a look at social media, everybody's screaming from the rooftops that we're about to correct because we're at the 50-day moving average. Something I wanted to point out is Since the start of the year, we have had 4 confirmed closes now below the 50-day simple moving average, and the market has rebounded on the following session on each of these occasions. And on the other occasions, of course, the 50 MA has acted as support. So we have had a close below the 50-day simple moving average. It's been a quadruple witching, for those of you that are familiar with the term, on Friday there. And again, we're going to know a lot more. I don't think we can draw too many conclusions from today's price action. I think we all understood coming into today that it was likely going to be a little bit volatile. That has certainly played out. So I'm hoping and would like to see a rebound on Monday in line with the occasions, the 3 previous occasions that we've seen. The seasonality with the S&P 500 dating back 70 years is not good. This is a chart that I put in last month when I did an analysis 4 weeks ago, just telling everybody and showing everybody, look, you need to be quite aware of the September effect. Of course, we're always hoping that buy the dip kicks in, and something to note is we've not had a 5% drawdown since February. Now that's very unusual for the market. I think we traditionally get 3, sometimes 4 on average every single year, so it is highly unusual. We've had an incredible run with the major averages. Of course, that doesn't tell the story under the surface, because there's been a lot of volatility and individual names have corrected and crashed, whilst the indexes have continued to just kind of plough higher. So there are plenty of names out there that are in healthy uptrends. Even today, there was many names that did very, very well. And again, I'm going to be walking through some of those in a second. The other chart I think that makes a lot of sense is the triple Qs, obviously technology. Again, this is another chart that I've provided to our clients, saying that I would expect a pullback to the 20 or the 50-day simple moving average, and that it would be very normal and perfectly healthy. Now, I've highlighted on the chart an area that I think that thesis would be revisited, and I would probably start to get actively on the defensive. But when let's say we stand on a 20-day simple moving average here, we have closed below the 20-day simple moving average. So logically, I'm expecting a retest of this level, and I would expect technology to catch a bit of a bounce at this level. So I'm not quite in the camp that's saying that we're about to correct and fall off a cliff. I'm still looking for bullish setups at the moment. The bullish setups for me are not in the small caps. The small caps are in an absolute sideways mess at the moment. They're up 5% one day, down 4% the next, 6% down the day after, up 5% the day after that. There's no consistency, very, very choppy, very stressful, I should add. So the small caps aren't really an area of focus for my work at the moment. Now, another chart that I want to draw your attention to is a chart that helps me with, I guess, the correction side of things. Now, this is a chart that compares consumer discretionary versus the consumer staples. I think we probably all understand that when the economy is healthy, discretionary stocks are generally doing pretty well, and they're in an uptrend relative to staples quite a lot of the time. When we reach extreme levels in momentum RSI, quite often tells us that there's a potential decline correction on the horizon, and when we get to the bottom side of things, we can see that traditionally it helps us with identifying bottoms in the market. Now, I'm not expecting anybody watching this to have this chart. This is one of those charts that technical analysis geeks like myself look at, and we pay attention to this type of work. So I guess what I'm trying to communicate here is that there's not any extreme here that tells us that we're about to correct. So could we still correct? Yes, we absolutely could. But this is just one of those charts when we weigh up all the evidence. I'm seeing this as a healthy pullback at the moment until proven otherwise. Now, I'm the first person to say that come Monday, I could be proven to be incorrect, and we could absolutely correct. I'm prepared for it, and hopefully everybody watching has some kind of game plan. We've got the equal weighted index of the S&P 500 again, currently holding above its breakout level, and we've got the Nasdaq Composite. Whilst not a great day, again it is still holding above its level, and similar with the Russell 1000 Growth ETF. So that should give you some kind of overview of the market and how things are kind of looking. I get asked a lot as well, growth versus value. The growth versus value debate, for me, it's a bit of a non-debate at the moment. I think that we're seeing a lot of chop. I think they're all kind of going up together. I am not fixated on growth stocks like I'm sure many of you watching are. I'm sure many of you are all growth tech. But what I want to show you this week, this month, is there are plenty of names out there that are more than capable of ripping 20% in a week. And they're probably names that you're not expecting to see. We're not talking about penny stocks here. We're talking about solid quality names, but it comes down to the area of the market. I'm looking for trends in the market. That's my bread and butter, and of course that's what my clients pay me to do. So hopefully you get some value, and hopefully that all makes sense. Now, there's a lot of charts that I'm going to be walking through here, individual names that are holding above support levels. There's breakouts, there's pullbacks, there's mega caps, there's mid caps. There's a lot in here. I would just urge anybody, if there's any charts that you like, of course, do your own due diligence. Make sure you're comfortable with any positions that you might want to initiate. But we're going to start off with NVIDIA. Now, for disclosure, this is a stock that I own. Now, it is chopping about sideways at the moment. Now, what I'm interpreting the chart at the moment is I'm looking at it as building a bit of a base at the moment. Now, it is still holding above my trailing stop, and I'm looking for a breakout here. I think if the market catches a bid Monday, Tuesday next week, and we get a breakout above this level, I think that's a logical point for me to potentially add to my position. And of course, I'm using Fibonacci for potential targets, and of course that's a number that I'm working with. Moderna, now I covered this one in my monthly June analysis, and I've covered it a few times on social media as well, just highlighting this RSI level with Moderna. The $500 psychological round number barrier, very, very real, but it does look like it's starting to gear up. Now, something that I've heard on the grapevine is that there's potentially some data that's going to be coming out soon with regards, I think, cancer numbers, research, and there's a potential catalyst on the horizon. That's something I've just picked up from StockTwits and some articles that I've read there. So I think above $500, I think makes a lot of sense here. It looks to be building a bit of a base. We've got Broadcom. Now, I did cover this one last month. It has broken out. It's not broken out with a massive amount of conviction so far, but over the course of the last week, there has been a bit of a spike, and it does look like it wants to start to get moving. It is rising relative to the S&P 500. This is one of those indicators that I like that just tells me how the stock is performing. When it's rising, when this line is rising, it's outperforming the S&P 500. And if you're looking to outperform your portfolio, and certainly this is one of those indicators. It's not a magical tool. It just tells us if it's outperforming or not outperforming. I like stocks that are outperforming. I don't know about you, but it certainly makes a lot of sense. Big pullback in Facebook this week. I guess, with the broader market declines, that would be perfectly reasonable and expected. It has pulled back to its 50-day simple moving average. Now, I don't mind the risk to reward proposition there. I think all bets are off if we start to break down below these levels. If you note, it is hovering around its Fibonacci extension level, so it would be a big problem for me if it does break down. but as long as we're above the 50-day simple moving average, as long as we're holding above this Fibonacci level, it's potentially a stock you might want to look at. Square Inc, I've covered this one a few times over the last few months. We actually provided this chart to our clients and members a few months ago down here. Our upside objective was met. It has pulled back. It has pulled back to its 200-day simple moving average. That's a logical buy the dip opportunity. As we can see, the market reacted to this level. Now again, whether you believe in technical analysis or not, for some reason the market respects these levels, and I don't question it. So I think that's a buy the dip opportunity in Square Inc. Airbnb, again, provided this chart on the 3rd of August on this breakout. The breakout initially got going, did pull back a little bit, then of course we got a massive spike on positive earnings, and the stock has been trending since then. I think we all understand that the Airbnb, how big of a company it is, and I don't know what it's like, certainly within the US at the moment, but I think in Europe we are starting to open up again. Travel is now starting to get moving, and I think that's a bullish signal for Airbnb, and it's one of the reasons why I've been covering this one. And as we can see, the trend is still intact, and I like Airbnb as a company. Sea Limited had a stock split announcement, and seems to be a bit of a positive reaction there. Trend is moving higher. We've not violated or closed below key levels that I use for my process. We've got excellent relative strength relative to the market, and there's room for it to run with RSI. So again, I think the signals there are for Sea Limited that is certainly bullish. Now that leads me on to Apple. Now Apple is not so bullish. I think something that I understand is, somebody who famously said once that I'm happy to own Apple at any price, and of course it decided to plummet 20%, and I stuck to my guns. I held all the way through. I'm in the camp now that I can't be bothered if Apple is going to do that again. So depending on what happens on Monday, I might just cut a long-standing Apple position and move on to something else. It has violated its 50-day simple moving average. It has violated a support level for me technically, and it's accompanied on heavy selling volume also. AMD, on the other hand, I have bought in this week, bought in on a pullback to the 50-day simple moving average, and I'm hoping next week the market catches a bid and we rebound. The reason I bought in, it's not because I'm super bullish on the market. I think, just walking back a few minutes, walking through the market charts, I'm very on the fence as to what happens next, but what I do look for are risk to reward propositions, and for me, I like AMD because I can define the risk. I can buy in at 104, I can have a stop loss, just under this level here, under this breakout level, and I think there's a lot of upside potential in AMD, provided that it does obviously catch a bid. So I'll be watching that one next week with a lot of interest. XLNX looks to be breaking out. It has been chopping about, I guess, for the last few weeks, but I think as long as it's holding firm above this $150 level, I would expect some kind of catalyst to come in and to push the stock higher. Of course, if the market declines, all bets are off. XLNX won't be immune to any declines, but provided we do catch a bid next week, then XLNX might be one of those. ARC Innovation, I've provided this chart to a couple of clients this week who like to buy at the bottom end of a range, and that's the number. I think there's a logical upside there. Noticed, towards the end of the session today that the small caps did catch a little bit of a bid. I think, if memory serves me correctly, the market and the small caps finished green for the day. Don't quote me on that, but something's telling me it possibly did. But again, the ARK Innovation ETF, I think there's upside there. CDNS, massive uptrend at the moment. I covered this one last month on this breakout. The breakout is still intact. The trend is still intact. Yes, we've had a pullback a couple of days this week, but what's not to like about stocks that are trending higher? Salesforce put in a successful retest. Again, this is a chart that's been talked about with many of our clients and members this week. Again, I've got a 283 target. I think all bets are off if it closes below 250. Let's just say 252. If it starts to break down below these key levels, that's a problem. Datadog is just an absolute rocket ship. Again, there'll be many of you that are scared to buy stocks that are going out at all-time highs. I think something I understand, especially when you talk about growth tech names, it's very difficult to apply fundamental analysis and to apply things like valuations, etc., because there's obviously so much growth attributed to the companies, and how do you value growth? I take the view that there's, when you're assessing companies, there are many smarter folks than I, and if the stock price is going up, that tells me smart folks are buying the stock, and that's all I really need to know. And that's why I focus my study on price action and not get into the valuations of companies, because price ultimately is what pays, and I like the chart for Datadog very, very much. Now, I posted this chart to social media this week, and something that I think is key to communicate at the moment. When you have quality companies, and let's just say Docusign's a quality company, that are breaking key support levels, when we are in a bull market like we currently are, rather than look at it through the lens of, well, this stock is breaking down, let's short it, you should add it to your watch list and look for this type of setup where we get a failed breakdown. And what we know with failed breakdowns is we can get fast moves going in the opposite direction. You can have a look at another example that I put out a couple of months ago for Spotify, exactly the same kind of thing. You're looking for quality names that are breaking down, and then all of a sudden they just catch a bid, and then you've got the bear trap, and then boom, higher they go. So, there's many of you, I'm sure, that like to short stocks and uptrends. It's not my game. I'm looking for buy positions in quality stocks. We've got Ethereum holding above its 50-day simple moving average. I get asked about crypto a lot because it's something that I've been covering for the last 12 months with our clients and members, and I think as long as Ethereum is holding above its 50-day simple moving average, then I'm perfectly okay with it. I have a long-standing position in Ethereum. It's one of those that I actually dollar cost average on, and I'm looking for ultimately a breakout here, and I'll potentially add to my position again. But I find obviously the crypto space fascinating, like probably most of you. We've got Google struggling to break out here now, very, very similar to the chart that I walked through with the S&P 500. We can see that these Fibonacci levels have some merit. I think if it can get a healthy breakout above this level, then it's probably going to move. But it is struggling at the moment, and for me personally, I would just be looking to allocate elsewhere. The upside objective for my work on Google has been met. Home Depot looks to be building or close to completing the right side of a base. We know the saying, the bigger the base, the higher in space. So I think if Home Depot can get above that 350 level, then that's certainly going to be good news. Now we've got Lam Research. Now this is a chart that I'm actually sharing with our clients this weekend. I think there's another 8% upside. Now you can see the chart on the left. I actually provided this one to our clients and members when it was down at 584 at the lower end of the range. It has been chopping about. The 200-day simple moving average is acting as support. A pivot has been created, so we're now just looking for a breakout here. I think if it can get above 620, then that would be a logical place to add, and I think there's a pretty reasonable and quick 8% upside there for the target, which is the first target I should add. That 670 is the first target. If it breaks out again, of course, I'll revisit the chart and there'll be higher targets, but that's currently how I see Lamb Research at the moment. Melee, I've covered this one over the last couple of months. Since it broke out, it is now approaching our target level. The uptrend is still intact. Again, it's not a coincidence that price is bouncing from these levels. So we're just looking for a $2,000 target there. MGNI, again, it's range bound at the moment. We're looking for a $38 target. I covered Thermo Fisher last month. I wanted to cover it again this month because, as you can see here, massive gap up, heavy volume accompanied with this. It's had a monster move in the last month. Congrats anybody that bought in on my analysis last month. So is this a breakaway? We'll see next week, but I wanted to point it out again because it's had a massive move today, and it makes a lot of sense. Not necessarily to buy immediately, but certainly add it to your watch list and maybe try and figure out if it's going to pull back and fill that gap, or whether it just goes on a rocket ship and it proves itself to be a bit of a breakaway gap. Now, this will be an ETF that many of you, I'm assuming, have no clue about. Now, this is the dry bulk shipping ETF, which has been on a rocket ship, 267% year to date. Now, for those of you that aren't aware, shipping companies are basically able to charge what they want, and most of them are making a lot of money at the moment. Now, when you drill it down to individual names, which I'm about to do in just a second with a name, if the Breakwave dry bulk shipping ETF does break out, there's going to be some big moves on the horizon with the shipping names again, in my view. I think Zim Integrated Shipping Services, now for disclosure, I own the stock. This is a chart that was provided to our clients and members on this breakout at 50. It's close to hitting my first upside objective. Of course, if it breaks out again, then we'll revisit that. But I think you should most definitely, start to do some research on some shipping names. I have communicated quite a few in the last week to our clients and members. I think it's a place to do a lot of serious due diligence at the moment. Zscaler, disclosure, I own the stock. Again, provided this one to our clients and members. It's pulled back to its 20-day simple moving average. I keep an eye on RSI levels also. Quite oftentimes we can get a bit of a rebound at certain RSI levels, and that seems to be the case at the moment with Zscaler. So I still have a bullish thesis. This is the chart that's been provided to our members this weekend. The bullish thesis is still intact at the moment. Again, very similar with Cloudflare. Disclosure, I own the stock. We provided this one at $85 to our clients and members, and the trend is a thing of beauty at the moment. They are aligned again with the NFT space, for those of you that aren't aware, but it does look it's potentially looking to break out and go on another run. Antero Resources, again, this is a chart that we provided last week to our clients and members. This $15 level has had a good week. For those of you that aren't aware, the natural gas space is on fire at the moment now. Is it due for a pullback? Probably. What will that mean for Antero Resources? I don't know at the moment, but we just need to, I guess, focus on the individual charts for the stocks that you own. And I think with Antero Resources, that the path of least resistance is currently higher. We've got Boston Scientific. Now, this is a chart, resistance dating back to May 2004. We tested that level again in December 2019. and we're again testing this level today. So I think if Boston Scientific can get above $47, I think everybody and their dog should be adding this one to the watch list. That's a massive base, and that's not a bearish development if it breaks out. Doesn't guarantee that it's going to rip off to $100, but the weight of the evidence would suggest that it's potentially likely to move higher. Unity Software, again, this is a chart that's been covered with our clients and members. It's breaking out, it's pulled back, retested, and over the last few days, despite obviously the market declined, Unity Software is one of those uptrends that's doing absolutely fine, holding above its 200-day simple moving average as well, and that's the number that I'm working with. Snowflake, now this actually hit our target here from this failed breakdown, so I'm looking for a breakout above this level here. I think if it can get above 330, I think that's the number that we're working with here. That's the next pivot. The pivot was created back in December 2020, and logical target there of around 430. INMD, massive uptrend. Again, we've got many of our clients and members in this one. Tim doing very well in his options, but it's actually down to Ross, who's been banging the drum on IMD for about 12 months now, and it's just an absolute thing of beauty. Uptrends, even with options, they do very well. And we've also got Take-Two Interactive. Now, going back to the Docusign chart, I would put Take-Two Interactive in the quality company box, and I think there's a potential here of a bear trap, and if that's the case, if we break down and the market catches a bid next week, I think Take-Two Interactive might be one of those that there's a potential signal of a bottom there. So hopefully you got something from the analysis. If you're somebody that perhaps struggles a little bit and have found the last couple of weeks quite challenging, feel free to stick around for a minute or so. But if you have got value from that, please do subscribe to the channel. Let me know in the comments what charts you like. If there's any charts that you want covered next month, feel free to comment, and I'll do my best to reply. But if you are somebody out there that perhaps struggles a little bit, perhaps with technical analysis and the markets, whatever your deal is, feel free to go and jump on to our website at honeystocks.com. We provide various membership options, just to kind of walk you through what it is that we provide. We provide a premium weekend analysis, provide premium charts every single weekend to our clients and members. We also provide trade ideas. I'll show you what that looks like in a second. We provide a halftime analysis every single Wednesday. I've got an incredible community of investors and traders from all over the world that I've had with me over the last 3-4 years. That's included with all our memberships. I provide charting support on a daily basis, so if you're somebody that would like a second opinion, or you just would like that access to a community and a professional market analyst, I provide charting support on a daily basis. And if you're somebody that would like to enhance your knowledge of technical analysis, or maybe add technical analysis to your skill set, we do provide full access to our technical analysis program with all our memberships. But it's very straightforward. All you need to do is just click on join membership here, and it'll take you through and show you all the membership options that we have. But this is what our trade alerts look like. We publish them all on our website also, but this is a recent one, obviously, for Zim integrated shipping services, as I walked through a second ago. That's up at $60 at the moment. That's the original alert that went out for Cloudflare. Square Inc again has done that met our target. Zscaler is still running. Lam Research as I walked through a few moments ago. Antero Resources, I actually covered this one at $10. And Plug Power last year was an absolute monster, and that was, you know, going on until early this year. Ended up being 400 odd percent upside. But I'm very, very unique in what I do. I log every single trade idea that I have ever put out to our members, and I've done this over the last 4 years. I have a very strict code of ethics with my professional bodies at the CMT Association. So all data on the website is fact and non-misleading. So you can go and have a look to see if the types of charts that I recommend to clients and members are the types of charts that you like to buy. You can see the price that I've recommended them, how those stocks have gone on to perform, and yeah, feel free to go and scrutinise that and see if my work is a good fit. But I can't say it any better than what my members say. This is an email that I had this week from Nick. He's been with me for the last 12 months. He's saying he's going to be a member for life. Again, Rocco, guidance made my year, not just because of the returns, but for the education. Again, that was on July 29th. Vince has been with me, I think, for 3-4 years now. Second year in a row, his account's up 200%. Ganesh, $25,000 profit with 45 contracts. I forget the trade, but that was earlier this week, I believe. Another one massively outperforming the S&P 500 with the returns. Again, Charles, happy to renew as well for another 12 months. So, you know, feel free to go and check out our website and, you know, try and figure out if my work is a good fit. But, you know, there's endless success stories, and it's real members. I publish all the testimonials as well. Real members, real results. That's my whole thing. But I think we're probably a good fit for you if you have a mid-term approach to the markets, weeks to months. We're not a good fit if you're a day trader. I don't want you signing up if you're a minute time frame day trader. I couldn't think of anything worse than providing charts to help you. So please don't sign up. Anyone that's maybe looking to get away from day trading though, I think that might be a way to kind of do it. If you want to learn technical analysis, if you're maybe too busy for work, family life to maybe find the best stocks, maybe you just want to be part of a community, or maybe you're just maybe sick of hunting around social media for ideas and you maybe just looking for a place to call home a little bit. But, you know, again, feel free to go and check out our website and figure out if my work's a good fit. But yeah, hopefully you've got something from this. Hopefully the market holds up next week and we can all go skipping higher with our portfolios. But as always, please do have a plan in place just in case the market does decide to dive off a cliff. So wherever you are, please do enjoy your weekend, and I of course hope to welcome you soon. Thanks very much for watching.